The long-awaited IPO for the popular stock trading app Robinhood has been surrounded by controversy, to say the least. From a $70 million federal fine to a push from the Reddit users that made it famous, saying the world should ignore the Robinhood IPO altogether. So what will this mean for the future of the newly public company? Joining us now to discuss is Michelle Snyder, partner and director of trading research and education for the Market Gauge Group. Now, Michelle, Robinhood was just fined $70 million by Wall Street's self-regulator for widespread and significant harm to its users. The company is also under scrutiny from the SEC over the practices that generate most of its revenue. So how do investors see all of this pressure right now?
Well, we can add to that, by the way, the $12.6 million they had to pay in restitution, or what I like to call the list of their crimes and misdemeanors. For example, false margin information, erroneous margin calls, inaccurate account balances, inaccurate options trading risk, meme stocks, they couldn't keep up with the volume. And we had that unfortunate incident where that 20-year-old kid committed suicide because he thought he owed a lot more money, which really goes down to, I think, their biggest issue, which is customer service. So if we put that all aside, let's look at where they make money. So where does Robinhood make money? First of all, they have interest on their uninvested cash. So in other words, if you don't actually invest the money, they will charge you interest on that. They also have a subscription service called Gold Service. They get $5 a month on that one from their people, and they have 30 million subscribers. But their biggest way that they make money is selling order flow. And that's where a lot of the Reddit people are extremely upset about, because in essence what they're doing is they're selling your order flow to institutions, which then of course can jump ahead those trades. So if you put that all together, we have to continue to see where it's going to monetize from, number one. Obviously, it can't get itself into too much more trouble at this point. And also just the whole trend of day trading has to continue, which means the market has to stay solvent. If we get any kind of shift in how people are investing, that could be trouble for them. So that's really the bottom line. The zero commission, everybody's doing it now. It's more competitive, and essentially, really, basically, they, as I said, I think the most important thing is that they cannot really fail in terms of their customer service.
Well, and like you said, that day trading trend has to continue. Those retail traders have to stay in it, and we don't know if that's going to go away when people start to have to go back to their regular lives. And frankly, that's why they're capitalizing on this IPO right now. They're also pledging to set aside 35% of its shares for individual investors, those retail traders that we talk about. What kind of impact do you see this having? And is there any conflict of interest in this plan for Robinhood to encourage users to buy their company's stock basically on their own platform?
Well, it's definitely atypical, because usually the retail investor does not get an opportunity to participate in an IPO. They've already raised $15.6 billion from private investors, and they're looking to raise another $100 million, like you said, from their actual own customers. So essentially what you have to really understand is that there is inherent risk in buying into an IPO, especially as you just said, Brent, considering that they're making the money off of you. So now you're sort of double dipping in terms of your investment. And so I'd say just do your own diligence and expect that there could be bumps in the road before you decide to plunk your money down. But on the other hand, they're growing. Their user base is continuing to grow. So it could actually also turn out to be a good thing. You really have to understand what you're getting into.
Now, in terms of growth, we've talked a lot about how these Reddit users really helped turn Robinhood into a viral sensation earlier this year with the whole meme stock craze. Now it seems like there's kind of a movement to go back against Robinhood and just ignore this IPO altogether. So is there a chance that those Reddit users could have a significant impact on the company's IPO before it has even gotten off the ground?
Well, of course, there is a chance, but I think that I don't see that as being the major obstacle here. I think the most interesting aspect that comes out of the Reddit is that Robinhood itself can become a meme stock. But still, if you look at the company, it has the least amount of barrier to entry to open an account. Literally within 2 minutes, you can get an account going. So if anything other comes hot and they resolve the issues and they can put confidence back through their customer service, then I think those Reddit kids won't really have much to say about what happens with the IPO.
Yeah, it'll certainly be interesting to see how long it stays on their radar. Great insight as always. Michelle Snyder of the Market Gauge Group, thank you so much for your time.
Thank you.